Hi, Salams. How's it, guys? How's it, guys? Yeah, no, I got a bit delayed. I was actually busy with something else, and then I got delayed. Yeah, so I got about 800 people. Sorry, no, sorry, wrong person. Trade goal. We're not gonna trade. We're not doing any trading, guys. We are. This is mentorship, guys. So, many people here. It's only 36 people. Damn, only 36 people. Okay, I'm gonna send the things here. Trade goal. You from South Africa? Lacking a little bit. Yeah, I'm from South Africa. What you mean lacking a little bit? Yeah, I was busy with some personal stuff, but we're back now. Okay, guys, we just wait. New people here now. We'll wait about 50 people, let's say. It's 39 people there. Okay, I'm just waiting for more people to join. Can we just check my phone quickly? Okay, it's 44 people. Okay, we'll start the live. There's about 44 people. Whoever misses the live, they can always watch it again. So that's fine. Uh, okay, let's start, guys. Welcome, everyone. Right. Uh, Okay, so this live is gonna be, are you gonna teach us a new strategy? Yeah, I will teach you something that, and if you guys join the US30 and the Nasdaq live streams, you'll basically you will sort of know the strategy that we use, right? It's sort of you guys should know the strategy that we use, and it's a very simple strategy, right? This was the trade that we caught today, basically. You can see basically our full TP was basically hit here. This was the trade that we caught earlier today. Okay, right. So for this, right, you guys gonna need trading view. Okay, and sometimes I trade USDT, sometimes I trade Nasdaq. So what I do is I use this tool right here, and you can basically have both the charts on your screen at the same time. Right, so I have Nasdaq open here and I have USDT. Right, let's just close this here. Right, Nasdaq chart is open as well as my USDT chart. Okay, so what we do is we don't trade throughout the day. We only trade during the New York session, right? So let's just look at an example, right? Let's just go. So first things first, you're gonna need this indicator. It's called Sessions by Lux Algo. Right, Sessions Lux Algo. If you go on the indicators tab, right? Okay, and it should come up there. Sessions Lux Algo, right? You can change the settings here. There we go. Right. So you'll see the settings here. New York session 1530 to 1535. Don't worry about these settings here. This you can see these are off. So you can screenshot the settings here. This is the settings, the exact settings that you're gonna be using. So 1530 to 1535. Mark that you're gonna put this time in range, ticket, maximum and minimum ticket, and then UTC 2. Right? Tick all of that. Tick all of this one that you see here. Right, tick that, and the UTC plus 2. Don't worry about all of this. Right? So now, every day during the New York session, right, we trade. Right? We trade this exact strategy. Right? So this strategy we use it on the 1 minute time frame. Right? You can go on your 1 minute time frame. Yeah, it's simple, guys. Right. Okay. Let me show you how simple this is, right? So how it works is, firstly, you gotta know what a fair value gap is. Okay, fair value gap, basically it's a 3 candle formation. So let me just see here. A 3 candle formation. Basically, you'll have one candle like this. You'll have another candle like this. And you'll have another candle like this. Right? 3 candle formation. Let's say we have a wick like this. Let's just draw wicks. Okay, I don't know why it's not. Okay, just draw it again quickly. Not sure why it's not drawing. Okay, so you have that. That's a shit drawing. Oh my days. Can't draw. Yo, what's up? Yeah. Wait, the magnet tool is on or something, I think. Yeah, the magnet tool is on because it's like thing. Okay, don't worry about wicks. Flip the wicks, bro. Okay, just say for example that's a wicks. Okay, don't worry too much, right? So say for example this is your wicks, right? The magnet tool, yeah. Okay, so this is your candle wicks, right? Now you're gonna have basically a gap that forms here. Okay, this gap that you see, make the candles wider. What difference would it make if it's wider? Just make it like this. It's the same thing, bro. That doesn't really matter. It's just like it doesn't really matter, I think. But just see. Is it too small for you? Can you guys see? Are you guys able to see? Like, was it too small for you? Okay, I'll just doesn't really matter. Drawings doesn't really matter. You guys will get the idea that I'm trying to put through, right? Basically, Oh, you can see. Okay, perfect. Guys can see. Okay, so now this is your mix, right? You will see a clear gap between the candles here. This happens, right? You'll see something like this, and there'll be a gap like this, right? A gap between this candle here and this candle here. You'll have a middle candle which will have a clear gap, right? It can be bullish and it can be bearish, right? You can see. Okay, perfect. Okay, I'm just gonna make this green because some of you might get confused because, right? Oh, okay. Drawing is fine. Okay, perfect. Thanks, man. Okay, let's just make this. Okay, I thought you couldn't see. Okay. Right. So this is basically a bullish fair value gap, right? You can see there's a three candle formation, there's a gap below in the middle, and that's basically your fair value gap, right? So that's an example of a bullish fair value gap, right? Now let's look at an example of a bearish fair value gap, right? It's the same thing, same concept, right? You'll have three candles basically here. And this, okay, another thing is, right? This doesn't mean that this, okay, I'll come back to this. I think I'll come back to that, right? So we can have another candle like this, bearish fair value gap. Let's make this thing big. Right, there's a candlestick there, so make all of this red. Right, let's knock this out. Okay, now this is an example of a bearish fair value gap. Okay, you can clearly see you have the first candle, second candle, middle, then the bottom candle. Right, in the middle candle, you will see a clear gap here. Right, this is a bearish fair value gap. So we have a bullish example right here. Okay, and then we have a bearish example right here. Okay, hello everyone, shubs. Right, we have a bearish example, and we have a bullish example. Right now. Does it? Okay, so basically, all we need to know to whether a fair value gap is bullish or bearish. Okay, all you need to know if it's a bullish or a bearish fair value gap is the middle candle, right? If this candle here is bullish, meaning that it's a green candle. Okay, you most of you probably have green on your chart, whatever. That it's a this candle here is green. Then this here is a bullish fair value gap, right? It doesn't matter. Okay, this can also be red. Okay, this can be a red fair value gap. It's a red, say, red candle right here. This can be a red fair gap right here. This can be a red candle. Let's say it pushed up like crazy. What are you saying, bro? Buy. Why buy, bro? We're not trading anything, bro. This is mentorship, right? You can say that this here right here is a right. That doesn't matter that this here is green. What makes the fair value gap or IFVG valid? Okay, we'll come to that. Let's just stick to this for now. We'll come back to that. Right? So you can see we have a fair value gap here. Right? Doesn't matter. All I'm looking at is the middle candle. Right? Whatever color buy or sell, in other words. Okay, I'm a bit confused what you're saying. Yes, okay, okay, we'll come back to that. Right. So this right here is a bullish fair value gap. Okay. Which okay, like you're saying, okay, we could use this for buys, right? So say for example, price basically moved up, came back in here, and you can take a trade. Once price closes above here, you can take a trade. Right? Price closes above here, bullish, you can take a trade. Okay, basically. Right. So, like I said, doesn't matter this candle here is red, this candle here is green, this candle here is green. What matters is this candle here is green here. So now this here is this is a bullish fair value gap. Even this candle here, this can be a bearish candle right here. This can be a bearish candle. Okay. You can have a bearish candle like this, and it'll still be a bullish fair value gap. Right? Why? It's because the middle candle basically tells us the direction of the fair value gap. Right? Here again, this is bearish, bearish, bearish. But now what happens if this candle here is green? It's still a bearish fair value gap. Why is it a bearish fair value gap? Because this candle here is bearish. Okay, this candle can be a bullish fair value gap, but it doesn't really matter. All we worried about is this candle here. Is this candle here bullish or bearish? Right? So now basically what we're looking at is we can basically wait for price to basically do this, tap here, and then break below. What you say to determine whether bullish or bearish, you need to. No, it doesn't matter. You can have bearish fair value gaps in a bullish trend, and you can have bullish fair value gaps in a bearish trend. Doesn't matter. This is your fair value gap. This is all you need to know to determine if it's a fair value gap. Okay. Don't know if that was it. Yeah, it was a candle that. That's why. That's why I couldn't draw the wicks properly, I think. Okay, it's I see it now. Right. So, like I said, all that matters is the middle candle. That's basically what tells us if it's a bullish or bearish fair value gap. Right now, I'm gonna go into the examples quickly. Okay, let's look at examples quickly. Right, let's just delete everything from the chart. Can we leave this here? Just delete. I'm not too sure. Let me just check. Let me play the live on my side and see if it's okay. Okay, let me know if it's fine now, guys. Let me know if it's fine. Okay, let me know if it's fine. Okay, guys, right? So it should be fine. It's working fine on my side, yeah. Right. Just play just so you know. Let me know if it's fine. Okay. Right. Like I said, let's look for examples now. Okay, we'll look at fair value gaps here, right? You'll see fair value gaps basically form throughout the charts, right? Doesn't matter if it's at the top of the chart, the bottom of the chart, it can be at the end of the chart, whatever. It should be fine now. It's working fine, guys. It's working fine. Team, it should be working fine, guys. It's working fine. Yeah, it is working here, guys. It is working. It's working fine, yeah. Okay. So coming back to this, right? Okay, it's better now. Yeah, I just restarted the stream basically. Okay. So like I said, fair value gaps basically will be found anywhere on your chart. You'll see 1, 2, 3 fair value gap. Right? There's another fair value gap here. Okay, just make this red. This right here is a bearish fair value gap. Okay. Look, we had a down, we pushed down, market pushed down. Basically, the reason why fair value gaps form is because the market moved too quickly in one direction, right? Leaving imbalances in price. We can see that there was an imbalance in price. Price pushed down, left all these gaps here, shows that there was a lot of sellers in the market. There were more sellers than buyers. Okay, so in anything, right? Remember, guys, this is like anything that you'll experience in life. For every basically, for every buyer, right? For every buyer of bread, there needs to be someone who's selling bread. Okay, you can't just buy bread out of thin air, right? There has to be someone who's basically doing the opposite. So sometimes in the market, there's gonna be more sellers of bread and less buyers, right? So okay, So I'm using bread as an example, right? So there needs to be balance in the market, right? If there's no balance in the market, you will be creating imbalances like this, right? So there's got to be balance in the market, okay? Just like this, right? So when there's an imbalance in the market, basically what happens is market will move quickly in one direction, and basically it'll leave all these fair value gaps here, as you can see, okay? So now you can see that there's a fair value gap here, right? There's a fair value gap here. There's also a fair value gap here. That's all bearish examples, right? I'm showing you examples of bearish fair value gaps, right? So these are bearish fair value gaps here. So what are we doing? We're looking for sells with these fair value gaps. So you can look how nicely price pushed down, tapped into the fair value gap, and what happened? It pushed out again. Simple, right? Basically, we tapped into the fair value gap, respected it, and we pushed out. Okay, right? So that's basically an example of a fair value gap. Yeah, let's look at this here. There's another. There's more. There's so much examples on our chart. Look here, again, a fair value gap. Doesn't matter that this is a bearish candle, but this here is a bullish candle, so we know this is a bullish fair value gap. So what are we gonna do? We can use this for buys. We can use this for buys, basically, right? You can wait for market to tap into it, and you can take a buy, right? Obviously, you're not gonna just take buys of every buy and sell of every fair value gap. There's gotta be context to the fair value gap. Okay, let's look at examples here, right? Let's look for a bullish example. Here we go, bullish example. Perfect, right? Yeah, again, example of a bullish example. All they will see all over this chart on the chart. There's fair value gaps, guys. Fair value gaps. Fair value gaps. It's so easy, guys. It's so easy. And the only way you are going to get good at this is if you actually put in the time and spend time on the charts and try and learn this here. This you're not gonna magically just learn this like you just after watching this lesson here. You're gonna know if you're gonna know how to spot fair value gaps. It's gonna take time, right? I didn't learn fair value gaps in one lesson, right? It took me time. Okay, it takes time to learn things. It takes time to learn how to trade. So you gotta put it without effort in trading. You're not gonna get anywhere, bros. Right? So let me show you guys examples. Right? Let's look at here. We've got here more examples all over, guys. Here's a fair value gap here. All over, you will see fair value gaps. It's so easy, guys, to spot. It's so easy to spot all over. Okay, it's that easy, guys. That easy, right? Okay. Now the next thing that I want to show you guys is invalid fair value gaps. Right, what makes it a fair value gap invalid? Someone asked us. Basically, what makes it fair value gap invalid is if price, you can see we formed the bearish fair value gap, price pushed up and closed, right? It closed above here. Okay, it closed above here, forming a bullish fair value gap here. Yes, definitely time and patience, right? So now what this here became is an I inverse fair value gap. We call this an IFVG. IFVG basically, right? Just make this black. Inverse fair value gap, right? So now we form the inverse fair value gap. What do? We can use this inverse fair value gap to basically take buys, right? You can use this. You can wait for price to close above, and you can actually take a buy, right? You can see we inverse these gaps here all over. Even here, we inverse the gap here. Look how we basically inverse this. Let me just get this here. We inverse this fair value gap here. Market close above, right? Close above. You're gonna take a buy there. Possible buy there. Stop loss below here, right? Take a buy there, stop loss below there, and then you can target it, whatever, those highs or whatever you want us to target. Okay, but there's more context to fair value gaps, right? Okay, the stream is still fucking working fine. Let me just check. Okay, the stream is working fine, guys. Stream is working fine. Okay, right. So that's your inverse fair value gaps. Let's look at more examples for inverse fair value gaps. Right, let's just see. You'll see that you'll find a lot of inverse fair value gaps as well. Okay, you can see there's a fair value gap here, right? Small fair value gap right there. And what did the market do? We closed about below it. That became valid, right? That became a valid fair value gap. Now, one thing is, right, it doesn't, if we need to see a candle close above, right? So you can see here, we close above here, we formed a fair value gap, we close above, right? And that was now became a valid inverse fair value gap. But let's say, for example, let me look for one example here. Let's just see. Right, you can see a fair value gap here. Okay, but price didn't go right through it. It just tapped it, went right through it, but it didn't close below here. It closed inside the fair value gap and then it pushed up and it's gone. Right. Eventually, of course, it did end up pushing down. You can see it pushed down, basically, there we go. But we had the fair value gap here. And we basically respected it, right? You can see we respected it. So this counts as still a valid fair value gap. As long as we don't close below here, we're good. Okay. We can look here. Okay. Yeah, we're still good. These are fine. This is fine. This still is a bearish fair value gap. Why? Price didn't close above. If price close above, then it's of course now it's gonna be an inverse fair value gap, and we can start using this for bias. Right? Okay, but eventually, of course, price what happened? We inversed it. Look at that. We close above. Okay. We close above and we pushed up. Let's actually look at how this actually plays out. We'll take this paper trade, this thing. I'm not checking this trade, I'm just seeing how this plays out. So let's see. Right, stop loss, we can go below there. Let's just see how this plays out. Right. You can see we tapped into it and we basically respected it. So we can see how this goes. Okay. We'll see how basically what happens. It doesn't, if it's bullish or bearish, whatever. Okay. Just delete this. Oh wait, that's actually the one there. Right, so we formed the inverse fair value gap. Actually, the entry should appear here, basically, as we close above there. But that's basically whatever. It's not a real trade. Right? So it's very simple, guys. It's very, very simple. Right? So to illustrate it, I'll just do something like this. Right, so we have the bullish fair value gap here. Basically, what we're saying is market dumped all the way down here. And now what happened? This became an inverse fair value gap, right? We closed below here, right? But say, for example, we close here. We push all the way down like this. We push all the way down, but it doesn't close here, right? This is still valid, right? This is still a valid fair value gap, okay? As long as we don't do this, that now becomes the inverse fair value gap, right? Same thing here. As long as we don't do this, we push above, that's fine. Okay, if you do this like that, basically, and we respect it, right? We respect it. Right, if it can go right through it, even go, it can go to all the way up. But as long as it closes below here, that's fine. That's completely fine. Just make sure that it doesn't close here and inverse the gap. That there becomes the inverse fair value gap, right? Okay, this trade did not play out. Like I said, guys, you can't just take trades of any any fair value gap. This is a clear example of that. Any fair value gap, you cannot take any trade of any fair value gap. You gotta have context to your trade. Right? If you just took a trade off this fair value gap here, you'd have gotten cooked. Right? So what fair value gaps do you actually take trades off, right? I'm gonna show you guys a simple and easy strategy that I use. I told you guys I use this strategy every single day at 3:30 to trade the NYSE live, right? So this is the setup that we took today. Obviously, stop loss was a bit bigger. I just put it when we went to break even. I just had it about there, somewhere there. So how we took this trade, right? Let's just delete everything else. Okay, so fair value gaps is basically all you gotta use, right? All you gotta use, and of course you gotta use this box, right? So one thing you gotta do is you gotta analyze both Nasdaq and US30 at the same time, and it's not as difficult as it seems. Trust me, it's not that hard, guys. It's not that hard at all, right? It's not that hard. So you're gonna go click here, layout setup, right, and you're gonna click here, and basically you will have the Dow Jones, which is US30, and you'll have the Nasdaq basically open on both sides. Right, let's just delete everything here. Lagging like a pro. Oh shit, it's lagging again. I have no idea what's happening, to be honest. Okay, should be fine now. Let's just see. Should be fine now. Let's just. It was good now. Oh my days. Yes, good. Okay, that's fine. Okay, if it's working, just let me know. If it doesn't work, then I can see what's happening. So basically, I just restarted the stream. I have no idea what's happening with this thing. Okay, I'll just switch this off. Right. So, like I said, right, you could have Nasdaq, US30 and Nasdaq open at the same time, trying to get the same charts, capital.com. Okay, and basically you'll have this indicator, right? I showed you guys the Lux Algo, 1530 to 1535. That's the only settings you are gonna worry about. I told you guys to screenshot this and right, screenshot it and then you can have the settings here. Right, so it'll mark out automatically. You'll see it'll mark out the first 5 minutes of the New York Stock Exchange, right? So, okay, so on your chart here, you'll see there'll be a settings here. Let's say layout setup. I'm not too sure exactly. Let me just check on Training View on the phone. I think Training View. I don't know if Training View on the phone will do that. I don't think so. If you have Training View on your phone, you gotta use a laptop for this. Okay, it actually does allow. So if you go on to your Training View, right, open any chart, you'll see 3 dots right at the bottom. Click the 3 dots on Training View, and there will be a button here called Layout Setup. Gonna click this, and you're gonna click here, or you can click let's just see Layout Setup. You're gonna click the bottom one. So you'll see basically you'll have your NAS chart and you'll have your US30 chart open at the same time. So you're gonna click 3 dots, right? When you open any chart, you click 3 dots here, layout setup, right? And I can change this to gold, whatever. Let's just change this to US30. Right? So you can see I have US30 and I have Nasdaq open both at the same time. Right? So let's see how we trade this, right? So basically how I trade this is I wait for a breakout on either side. Basically, it's an orb strategy, right? If any of you know what's an orb strategy, you guys will know it's as simple as it gets. It's not rocket science, right? It's so simple, guys. It's so simple, right? So you can see we had a breakout here. Okay, we have a fair value gap here. We had a breakout, right? Wait for market to retest into this. Look at that. Wait for market to close below here. So you're not going to take a trade here. You can see we close inside the fair value gap here, right? So basically we try and take the whichever index gave the trade first. So here you can see Nasdaq did the same thing, and also we're only using the 1 minute time frame, right? Nasdaq broke out, but it didn't give us any sort of like proper retracements, right? We had a fair value gap formed here. You mark out all your fair value gaps, right? You're gonna wait for a breakout. Let's just see here, right? no tap into the fair value gap, right? So you're not gonna take any trade. Here again, no tap into the fair value gap here. But on US30, we got the trade already, right? We don't have to wait too long. We got the trade already, right? Sometimes Nasdaq will give you the trade first, and sometimes US30 will give you the trade first. It can vary from time to time. But here in this case scenario, right? We got Nasdaq here. Sorry, US30. We basically what happened? What we did? We created the fair value gap. Look at that. We broke out, and we retested. So you wait for a breakout, and then you wait for a retest into a fair value gap. The fair value gap can even form outside of this box. It doesn't have to be in the box. You can take your trade as soon as this thing closes, wait for it to respect it, tap into it, respect it, and there's your trade. Right? So if you take a short position right here, right? I'm not gonna take a trade inside the fair value gap. I'll wait for it to close below there. So it's stop loss there, and you can target a 1:1 risk to reward ratio. If you want to hold it longer, that's completely up to you. You could have held it longer, you could hold runners, which I always encourage my traders to do. Right? I always tell people to hold runners at break even. Right? Could have hold a runner basically, then you gotta basically I think a 1:2 if you held for a full day for a full, right? But you might have got it stop break even there, I think. Let's see. No, you wouldn't have got it. Yeah, actually you would. You would have got a break even, yeah. If it tapped you, it picked your break even. Right? So this is possible trade that you have taken. There was a lot of noise on US30 here after this initial drop here that we had here. Right? That was about after we got the 1:1, basically it's there. That's about 700 pips, right? It's a lot. It's actually it might seem as little, but it's a decent amount, right? It's a 1-to-1 risk to reward ratio, and you could have held it a bit longer. Even here, you could have held that's about 1,000 pips. If you wanted to hold for 1,000 pips, you could have done that as well, right? So this was today's example, right? Nasdaq, on the other hand, right? We had the breakout, okay, and the move happened after US30. US30 gave the move at what time? 15:42. We only had this move here. Possible move you could have taken maybe was here, but that's like right at the top there. This was like after a whole 7 minutes later. So basically, US30 by then already gave us a move. We probably done for the day, right? So you're gonna take the trade that gives us. You're gonna take the trade the index that gives us the move first. Okay, so in this case scenario, US30 gave us the move first. Okay, right? Let's look at another day. Right, it's simple, guys. It's very simple. It's not rocket science, right? So you can see, okay, why probably some of you probably wondering why did I take a favor into of this fair value gap here or whatever. There's a fair value gap here. Why did I take a trade off here? Right, simple reason is that price didn't respect it, right? Price respected this fair value gap, so we take a trade off that fair value gap. Okay, it's pretty simple, guys. It's straightforward, right? So let's look at today's Thursday. Let's look at Wednesday. Right, let's look at Nasdaq. Okay, this was yesterday. This was Wednesday, right? So let's look at US30 first. Let's see what happened here, right? So we had a breakout here, as you can see, a clear breakout, right? What we need next is a retest into a fair value gap, right? It didn't really get a. There wasn't any fair value gap here. There was a fair value gap here. Let me just yeah. Where's this thing? Okay, so you might have gotten caught here. This might have been a stop loss hit here if you took this trade here. Basically, we broke out, we retested into this fair value gap here, but got stopped out here. Right? Nasdaq, on the other hand, what happened here? Let's look at Nasdaq. Right? We had basically a breakout here. And we had also where was this? Right, so if you took this trade here with a bit of stop loss, right, so let's just look at Nasdaq if there might be a trade that could have like helped us a bit. Yesterday I had a bit of a misjudgment. Like I took this trade here. I thought it touched it. I thought it tapped into it, right? But it didn't tap into it. Yeah, as you can see, it didn't tap into it. If you mark this out, so I took the sell yesterday on Nasdaq. It just about touched. I mean, like touched the outer basically, but it didn't. It didn't. No, actually, it didn't. Right. So I got a bit of a misjudgment there, and I took a trade there. But then I took a trade of this IFEG here, right? Okay, so remember, guys, you can use fair value gaps and you can use IFEGs. Okay, so IFEG basically you don't wait for any retest into it. You can take the trade as soon as the IFEG forms like this, right? Basically, we had the fair IFEG here. And you could have taken this would have been the proper entry. So if you took a loss on US30 here, you could have came back on Nasdaq. And to be honest, actually it formed like kind of the same time. So I that's why I ended up taking Nasdaq because I could see I took this trade here first and then I took that I added another position right here. As this candle here closed below here, I entered another position here. So I had one position. Where was it here? I had a position somewhere here, right? So my initial position was here, right? And I stop loss was just above here. And my other position was I had another position right here. Right, so that was basically there. As this candle here closes, that was basically our trade. And we got a nice 1,100 pips or so. We closed a bit about 1,100 or somewhere here or something. We closed. Basically, this was our trade, and that's about 1,100 pips that we caught. Stop loss was basically the same as that one, and that was our trade, guys. It's simple as that, right? So break up below, retest into a fair value gap, right? Or if you don't get the retest into a fair value gap, what you can wait for is an inverse fair value gap. Right? So you form a bullish fair value gap in this direction. All you're gonna do is wait for a inverse fair value gap, which we got right there, and you can take your trade. Right? Simple as that, guys. It's simple, simple, simple. Okay. Let's look at another example. You guys are getting it so far? Let me know, guys, in the comments, in the chat. Guys, let me know what's happening in the chat. Are you guys, yeah. Right. So that's basically it, guys. Let's look at more example. Let's look at one more example, and then we'll call it a night. All right. Let's look at the previous day. Let's look at Tuesday. Understand? Thank you. Understood. Okay, perfect. And guys, remember we trade this live, so you guys will see basically how we trade this thing. So you don't have to trade this thing alone. We trade this. Try to trade this live. Let's look at Tuesday. Right. This is Tuesday. Right. Let's look at Tuesday. Yeah. Tuesday was pretty simple on US30. Yeah, you have to practice it. Definitely, you have to practice it. And you can practice it with me live, right? So yeah, US30 gave the move first, right? This was so simple. This was such an easy buy, such an easy sell. Sorry. So we had a breakout here. Okay, for US, that's like we didn't really do anything here. We had a breakout and we just invested and whatever. But US30, wow, it just gave us such an easy trade. I mean, like trading can be so simple sometimes. Breakout below, okay. You can see clear breakout, retest into a fair value gap, close, and there's your trade, guys. Done. Basically done, guys. I didn't trade this day because I didn't trade this day live. It's because of there was CPI that day. But I think I said this on I said the sell on the VIP on Tuesday. So stop loss was you can put your stop loss about there, entry about there, as the thing respected. And you can go 1:1, like about there. So you know, stop loss can't be there. Stop loss is there, just above there. And it went down about 1,600 pips. Yeah, if you go for just a 1:1 risk to reward ratio, you got about 800 pips. Okay, so that's good. That's pretty good, right? That's basically, yeah. If you look at Nasdaq, what happened with Nasdaq? Let's just see what happened here. Right? You can see a breakout here, no retest in it to a fair value gap. Right? You basically disrespected all these fair value gaps that we formed here. Okay, actually, it respected this fair value gap here. But by then already, we can, like I said, you got to look at what gave us the move first. US30 or Nasdaq. US30 gave us the move first, so we only take US30. We don't worry about Nasdaq. Right? There's a higher chance that this might fail because this we already got our move here. So rather trade both, have both on your chart and see and analyze exactly. Guys, it's not difficult to analyze both at the same time because all you're looking for is a breakout. That's what we're looking for. Breakout, retest into a fair value gap, and that's basically it. Okay. That's how simple it is, right? So let's look at another example. This is on the 1 minute time frame. Everything is taken on the 1 minute time frame, guys, for OB. But we mark out on the 5 minutes. Sorry. So this is the first 5 minutes of the New York session open. That's basically it there. Right. And you guys can go back test this yourself, right? You guys can go back test this. This was a hectic day, I think. Monday was rough. Can't lie. Monday was rough. Let me just show you guys. Monday. Right, so what happened on Monday? Okay, this was a hectic day. Let's look at US30 played us a bit. Yeah, I took a trade on. I can't remember what trade I took here on this day. Yeah, I think I took buys on US30. I think I took this buy here, US30 here. But there was a possible entry here. You could have taken this entry here, but you got stopped out, of course. But I didn't take this trade here. I took this trade right here. Had a breakout here. The Nasdaq took forever, like a whole 1 hour to basically give us a trade. So I took this trade here, which gave us about a 500 pips or so. Basically, we tapped into this fair value gap here. It gave us about 500, 700 pips if I can remember correctly. Those of you on the live, you might remember it was about 700 pips. And then my connection got hit again. I don't know what's happening with my connection. And then I caught another entry, a re-entry. Those of you remember as well. If you're on the live, you remember we caught another buy afterwards. Basically, we caught this buy here. So basically what I saw was we respected this fair value gap here. You can see we respected it and we formed an inverse fair value gap. So all I waited for was market to inverse this gap here like that. And I waited for market to close like this. And there we go, that was my trade here. I took another re-entry for buys. That gave us about 1,100 pips or so. Right. Guys, I think that we're gonna call this a day. Call it a night. I think I gave you guys basically went through the whole week. Mark out first 5 minutes at 3:30. That's correct. First 5 minutes at 3:30, and then you are good. You mark it out on US30. Yeah, PM, of course. Yeah, PM. This is the New York Stock Exchange that we trade. So you mark out the first 5 minutes of the New York Stock Exchange, and yeah, so you wait for breakout, retest, and then you take a trade. So all the way look at this is right. Let me just show you guys. Basically, this is what we're looking at. Let me just go to one thing here. All we're looking at is this. Okay, we have a box like this, right? Market's basically moving in this thing here. Okay, turn it right, like something like this. Right? All waiting for is a breakout above, right? Wait for a fair value gap here. Fair value gap to form. Wait for market to tap back into it like this. Take your trade, right? Similarly, if you break below here like this, wait for a retest, take your trade. It's so simple, guys. Honestly, it's very, very simple. Okay, it's actually very, very simple. That's all it is, guys. That's all it is. It doesn't have to be difficult. Okay, break out above, look for a retest, buy. Break out below, retest, take a sell. That's simple, guys. That's simple. Right? Any questions, guys? Let me know in the comments. Any questions, guys? Let me know in the chat. Let me know any questions, guys. Quick. Any questions, guys? Any questions? Does it only apply for the NY Open? For this, you can use it as well for gold, but there's different times. Please put it on the screen again. There's different times, but we're not going to go over that for now. We're going to just go over. Yeah, so just worry about this for now, 1530 to 1535. 1530 to 1535. And then UTC plus 2. Don't have to tick all of this here. Don't tick all of this. Just tick this here. UTC 2. New York range. Maximum, whatever. Did you screenshot it, Shams? Let me know if you screenshotted it. Let me know if you screenshotted. Then we can end the live. Okay. Jazakallah. Okay, perfect. Perfect, guys. Right. Guys, I'll see you guys. Actually, next week we won't be having anything because there might be a seminar, in-person seminar for those of you in Cape Town. There might be an in-person seminar that we're going to be hosting on the 20. Let me just check my calendar quickly. Potential seminar on the 22nd of May. Right, let me just double check quickly. 22nd of May in Cape Town. We're still on for Friday. What should be Friday? We're talking about live stream. Live streams. I'm just double checking here with Rais. I'm not sure what you're talking about, Siraz. Are you talking about the mentorship, or are you talking about the live streams? Yeah, I'm just confirming now. I'm just waiting for Rais to reply. But I'll let you guys know, and then I'll send out I'll do a poster or whatever that you guys can join, right? Right, guys. I'll see you guys next week. Hopefully, I'll see you guys next week in Cape Town. We'll do basically the same thing, right? But this time it'll be in person. So maybe it might be better for you guys. Like if I'm in person, whatever, you can ask me questions easily. And yeah, so okay.